Breaking news on Trading Places, the world's worst podcast for VC secondary news. Aman, is today a special day?
Well, besides being your birthday, Dave, happy birthday.
Oh,
It is.
hey, thank you.
It's a pretty big day for SpaceX. They had their first earnings report as a public company today. So that is
yeah.
ETD over here. We're pretty big shareholders in SpaceX. So that was fun.
How did it go, Aman?
I think it went like this. I was hoping that Elon Musk would talk for longer than 5 minutes because I know I've been doing this long enough to know the more that he's got the mic and Gwyn, the better off we are. And then the longer that Brett, the CFO, speaks, that's trouble. He spoke for about 5 minutes, Gwyn spoke for 9 minutes. So there you go. As they opened, I think they started off with really strong top line. Revenues were way above expectation and 92% year over year and kind of blew away estimates. So that's good. EBITDA was good. Their profitability, at least through the EBITDA line, was much better than expected. A lot of that came from Starlink, which is their cash cow. So that was good. And then they should have stopped talking. But CapEx number kind of rose up with them, and the stock went from a slight positive to down 5 to 8% in after hours. So that was the story.
Yeah. Well, I put together a few graphs and charts. You may have some too, but the numbers were good, right? The numbers were generally good on a growth basis for sure. Maybe not so much on a, CapEx basis, but connectivity was up. AI was up. Space was up. Watch, was up. Operating income across three segments was kind of like a push, maybe about, break even or a little bit negative. But I think this is what you were talking about was, revenue is doubling, but CapEx is tripling. And the market probably not so excited about all of that. And then I think, stock was up initially and then down a little bit after hours, right?
Yeah, it was up. They opened the day. The stock did go up 9% during the day. So it rallied to about 124 at the end of Tuesday. And I think that was a lot of shorts, didn't want to get caught on the wrong side of an earnings call. And then while Elon and Gwyn were speaking, it went up to 125, 126. And, and then they kind of dropped the CapEx number, which is always the CFO's job and never the CEO's job. And then the stock is down, and they're probably down in the mid 1-teens, 115, 116. So, still above where they were 24 hours ago. And we'll see what happens tomorrow. But they gave up the early gain after the call and are down probably 7% in after hours.
So that was this, rise up until here, and then boom, fell down the ladder, kind of hanging out there. So, but still around 115, maybe 116 a share. That translates to a $1.6 billion market cap. Like, that's still not terrible. A little bit under the IPO price, but we'd be happy with that number. Maybe if that gets through to the end of the year, maybe we'll get a rise before the end of the year. Here was sort of the mid case, I guess, bull, bear, and mid case. We did a little work with Claude, and this is kind of over the next 30, 90, 180 days, not quite 180 days, maybe a little bit less than that.
Yeah.
But mid case, is kind of where it's at today, maybe a little bit down over the next 30 days, but, trending up by the end of the year, close back up to almost 2 trillion. If you believe the bull case, it's 3 trillion at the end of the year. And I guess if you're a bear, maybe it's only 1 trillion at the end of the year. Which one of those are you leaning towards, Aman? You a bull, a bear, you somewhere in the middle?
Yeah, let me give you the bull case a little bit more, with a little bit more detail and why to be optimistic and where I think the street's probably not fully digesting a couple of these metrics. So let's start with what was said in the call. I'll give you the positive news. So Elon, as I said, he kind of opened and then he spoke for about 5 minutes. Actually, Glenn went in for about 9 minutes right before Elon. And they were both talking about the operational execution, the quarterly accomplishments. Elon talked a little bit about the early days and how they almost didn't make it, and then the long-term goals for Mars colonization. So I thought there was consistency in what they've been doing operationally and the plan. I didn't hear anything negative or concerning there. Elon did drop one thing, which was a little bit new. He had been talking about a $1 trillion in revenue number by 2031, and he moved up his timeline by a year.
We're going to get there faster.
Right. Yeah. And maybe even 2029. Now, Elon is not always going to hit the numbers he puts out. Fair enough. So take that for what it's worth. But, he does expect 100 billion in ARR by the end of this year, and they're about a $10 billion
100 billion
run
by the
rate.
end of this year. That
Yeah,
seems optimistic. I could see
right?
getting to 50, maybe 60, 70, but 100?
It's a lot. So let's say he's even off by 50%, and they do get to, I mean, the street is expecting, before this fall, the street was expecting 39 billion for the whole year in revenue. They blew away their
Right.
top line, so they'll probably revise the revenues up. But if he's anywhere close to 100 in ARR, even let's say he's at 60 in ARR, it still suggests, yeah, those bulls may have it right. On the revenue side, and you talked about the different segments. So the space travel is a little bit under $1 billion in revenue. It's up 20% quarter over quarter. We knew that Starship had been making some successful flights in Q2, and it seems like there's just traction happening in the space travel segment, so that's good. Connectivity, 4.3 billion in revenue. Expectation was 3.8. 12 million subs. That's up 2x year over year. If that number
Really
keeps
good.
doubling for the next, 12, 18
Yeah.
months, and the monetization looked pretty good. So I think that was positive. And then the AI segment delivered 2.6 billion in revenue. Google hasn't even turned on yet. So that's going to start in Q3. Anthropic is only running in May and June, so only 2/3 of the quarter. So that should be a $4 or $5 billion quarterly segment. Everything seemed to be on track. The EBITDA number, as we said, was very good. We should just remind people what EBITDA is, because we're getting into the land of is this a profitable company or not? And the answer is, well, kind of, not really. It depends on what you mean by
Asterisk, asterisk, asterisk.
So in the venture world, we're very used to EBITDA, and EBITDA just means earnings before interest, taxes, depreciation, and amortization. The public markets kind of know what that means, but EBITDA is going to be very dangerous going forward for anyone in venture. Why is that? Because depreciation and amortization are things that you can't just ignore. You can ignore them when they're small numbers and they're non-cash. We're getting some really big CapEx numbers now in the tech sector. What do I mean by really big?
Yeah.
Like, this is the CapEx numbers for the hyperscalers. So, 5 years ago, you could have said, look,
Yeah. It's crazy.
CapEx across the big guys at 30, $40 billion a quarter, it's kind of lost in the wash. And now we're talking about like $168 billion to CapEx. You can't
Six,
just,
$700 billion a year on its way to $1 trillion a year. I bet you we hit $1 trillion run rate on CapEx by the end of the year, just top four.
so then you can't really ignore DA and EBITDA. You have to be like, it's hold on
The
a second.
duh part is and the duh gets worse if interest rates are higher, right?
Yeah, you got to finance it out of cash somehow. So EBITDA was positive, but then you have to get to operating profit, which was positive this quarter. So they are actually profitable in operating profit, and they just missed on net income. So what does that mean? The difference is, if you start with EBITDA, you got to take out stock-based compensation. That's like non-cash equity incentives since the IPO. That was 1.15 billion out. Depreciation amortization is 1.2 billion out. So that's the wear and tear. For them, it's going to be the data centers and satellite fleets and the rocket ships. So they're operating profit
Okay.
positive. And then they have interest expense because they have some debt. And then they've got this other stuff like taxes and FX and write-downs. So their net income is actually negative 0.54. But at the end of the day, EBITDA is positive, operating income is positive. And I think those are all, those were good news for the company given their expectations. And the
Yeah.
question really is, how do you feel about
Even
that?
0.5 isn't too bad on that revenue. That's kind of manageable if you make that better in the future.
Yeah. And I feel okay about the 18 billion CapEx only because I think it's it's a big number and a scare number given the trends happening in the hyperscaler community and where SpaceX has been. I wouldn't expect Elon and Gwen to be making that bet unless they thought it would pay off. So I'm giving them trust in terms of managing capital. And if you do that, then you got to feel good about the quarter. If you're worried about them making a bad capital decision, then you have there's your bear case.
If you're worried about them making a bad capital decision, you're not in the company anyway. Like, this is definitely a big bet,
Yes.
and it's a big bet on multiple categories. It's a big bet on multiple capital expenditures.
Yes.
I would say, actually, I'm kind of, surprised to the positive side with the growth numbers. I mean, you've got like three business segments, one growing at 30%, quarter over quarter, one 50%, 60% quarter over quarter, one growing 200% quarter over quarter.
Yeah.
Overall business is growing, sort of 50, 60% weighted. That's not terrible. If you think the business overall did $7-8 billion this quarter, let's say it's 8 billion. That's on an annualized basis. Now you're at 30 billion.
Yep.
You're going to have the Anthropic and Google compute rental hitting the books in Q3, Q4.
Yep.
It feels like 50 billion is not crazy by the end of the year, maybe even
Yep.
more given how, much he beat the numbers. I don't know about 100, but let's say the business is doing 50, 60 billion by the end of the year. Maybe with positive growth, it's at 100 billion at least sometime next year.
Yes.
Um,
And new deals coming online. Then I think
yeah,
you can convince yourself that the trajectory that just on the top line and the EBITDA numbers seem like that's
right.
fine. And whether if the capex number scares you at 18 billion and it's on its way to a much bigger number, and they have to finance it, okay. But they do have 100 billion from their IPO and subsequent financing, so they have plenty of money to spend. And the question
Yeah.
is that a good allocation decision or not? And do you trust the management team to make that call?
I think as long as you have customers like Anthropic and Google buying your compute, you're going to be okay with financing that, CapEx spend.
Yeah,
As long as you feel like, the launch business and the connectivity business is doing great. I
seems
mean,
like
Starlink is like doing fantastic. I think even the launch business, you'd be okay with the CapEx as long as you believe that Elon can launch rockets. And I think I would say Elon can launch rockets.
right.
So, so I don't know. I mean, I thought the valuation at 1.8 trillion of the IPO was pretty nosebleed, pretty optimistic. I think we all kind of expected it on thin float. It would rise for a little bit, but then it would come back down to earth. This was really, sort of the first come to Jesus moment where, okay, let's see those numbers and see where they end up. And really, I don't think you're surprised that there's growth in each of the segments. I don't think you're surprised there's capex spend or even that there's a lot of capex spend. It's, where do you feel like it's headed? And I would say it's headed in a pretty good direction. I might still think it's expensive, but it's not as insane as I thought 3, 6 months ago.
Well, the last thing we should just close on, and this is maybe part of the bear case, is there's a lot of stock arriving into the tradable pool in 2 days.
Right. That I think that's definitely going to put a lot of pressure. I mean, maybe not everybody is a seller right away, but these people have been holding the stock for, in some cases 20 years. And certainly in a lot of cases at least 5, years or more. And I think people are maybe nervous about where things go over the next 3, 6 months. So if
Definitely.
you feel like you're up and you're nervous, I do think there's going to be some selling pressure. And as that stock gets released more and more through the end of the year, I mean, if you thought that the indexes buying into the company were positive, you got to think that all this float,
Yeah.
coming to market is going to be a little bit of negative pressure on the stock. But again, I think if we go back to sort of like what we think the bull bear cases are, you kind of have to feel like, well, the mid case isn't terrible. you
Yeah.
know if you hold the price where you're at right now and you could feel it, picking up a little bit by the end of the year, you'd be like, okay, that's kind of all right. There's going to be selling pressure as stock unloads throughout those periods, but if they have a good, I guess when we'll have 3 months from now, we'll have another earnings report, and then
Yeah.
after that there'll probably be a pretty big unlock as well, right?
So the way it works is there'll be a 20% unlock in 2 days. There's a performance bonus, not triggered, but the filing said you had to be at, there's some 10% unlock that would happen if the stock was 30% above the IPO price of 135. It
Which
hasn't hit
is
that. So
135. I don't think that's likely to happen next 3 months. That seems, maybe it'll happen by the end of the year, but that seems
yeah,
unlikely
maybe, but
right
it won't
now.
happen yet. So what's unlocking is 20%. That's 104 billion in stock arriving into a pool of
Wow.
73 billion of
Wow.
stock. Implies 1.5 times the entire float. But then the guys who are getting it are Founders Fund, Alphabet, Fidelity, Sequoia, Gigafund, Valer, and then I think Bailey Gifford. And so if any of those guys are
Yeah.
sellers, which I don't think they necessarily are, that puts selling pressure. If all those guys are not sellers who are holding, who is not
But
getting stock,
but are
Elon
they
Shotwell and not getting stock, employees are locked up for
not
him.
till next year? Yeah, not
Sure.
till next year. But aren't those folks distributing to their LPs? I mean, my guess is if they distribute to the LPs, then it's the LPs' decision about whether to sell after that. I guess unclear whether they're distributing in these tranches or at the end of the year.
They may, I would imagine that they will be distributing, yes, but I don't think they're distributing right away. I think they will take their sweet time to distribute their shares and may just want to support the company and not flood the market, until the closer to 180
That
days.
is a little bit of a dangerous game, Aman. I don't think as venture capitalists we always feel comfortable holding on to public stock once it's public. I guess
Right.
in this case it's not completely
No.
binary. It's not like one big chunk. It's going to be
Yeah.
rolled out over, I guess the next 70 days, 90 days, 105 days, 120 days, 135 days is how that all rolls out, right?
Yeah. Well, it's Founders and
Um,
Sequoia and GigaFund. Those are and Valor. Are they going to distribute and create some selling pressure? Do you think, or will they
I
ticket?
think Valor will be, in Elon's pocket. They'll probably be hanging on to stuff, a lot. Antonio is probably not going to try and piss off Elon right
Exactly.
away, but
Exactly.
the rest of those folks, they got bills to pay, they got LPs to feed. I think you're
Peter Thiel
gonna,
has bills to
you're
pay.
gonna let the LPs make that decision, my friend. I
Yeah,
don't, I don't
you
think
can
you
do
want to
it.
be holding on to public stock. If there's selling pressure, you want to let your LPs make those decisions, at least partially.
And if Elon
Um,
asked you, "Hey, Dave, can you slow your roll and distribute maybe in a couple of months?" and you were the head
Hey,
of,
buddy, you know what? I've been your investor when it's a private company, but now it's a public company. Life's
yeah,
a little different.
yeah,
I think you gotta at least meet Mr. Market halfway on where he's between you know the stock market is a voting machine, weighing machine.
yes,
I think more and more it's going to be a weighing machine as things go on.
yes.
We'll see
So
where it
that's
heads.
that's the bear case. Is maybe the selling pressure puts some downward pressure on the stock, which is already a broken issue. CapEx numbers a bit scary, and not just for SpaceX, but for hyperscalers across the board. Just missing on your CapEx number is like playing with the sharks. Like, oh, that's a cute little shark you've got there. I wonder what will happen if I just douse my foot in blood and put it into the water. What'll happen? Oh, cute, great white shark. You don't want to miss your CapEx number right this second. So they did, and that's going to put some downward pressure. But between now and the end of the year, I guess we'll see how it goes. I still feel like their top line
Yeah.
numbers were really good, and that's what I was watching.
Yeah, I think the numbers were good. In fact, I think numbers were better than good. The capex was bigger than expected, but
Yeah.
maybe not that unexpected given that it's Elon.
Yep.
I think if you're a bear, you were probably like worried that it was going to fall below 100. I don't think that's super likely to happen. I think probably the case is somewhere in between bull and bear. I don't think it's the bull case for sure.
Right.
All the Elon fans out there. Here's one other question for you. I think there's been rumors of Tesla and SpaceX merging. Do you think that will happen? And if so, when do you think that will happen?
I've been watching Polymarket and Kalshi. I don't think it happens this year. It's just too difficult. You got to get a Tesla shareholder vote. SpaceX will do whatever it wants. Elon owns the controlling interest in SpaceX. Between now and the end of the year, you got to get a Tesla approval. You then have to clear a regulatory hurdle that takes months. So if you want to just make a quick buck right now, I would just bet against this in Kalshi and make your 18%.
Yeah,
That's not
that
that.
seems unlikely. This polymarket bet, only 5%, by the end of the quarter,
Yeah,
only 18% by the end of the year.
yeah,
Even then, that seems unlikely.
yeah. But next,
Let's flip over to Kalshi and look about, a little further out. And I guess if we're looking out, in April of 27 or
yep,
even May of 27, still under 50%. But after that,
coin flip. Yeah,
maybe we're getting above 50%, at least by the end of 2027. Now it's 2 out of 3.
that's where I'd say 60-40, but it'll take a year. And I think if the valuation drops to 1.2 trillion and Tesla is at 1.2 trillion, now it's a 50-50 merger of equals. Tesla could go for.
You think they'll be the same? I don't think they'll be the same. I think SpaceX will be worth more than Tesla.
Yeah. Then Tesla may struggle to get there. But if the closer the valuations get to parity, I think the odds should start moving in the favor of some kind of combination. And if SpaceX does pull away, then I think it's harder to execute because the dilution for Tesla
Yeah.
would be too much.
Well, if they do the merger, then Elon's estimate of $100 billion in revenue will happen immediately because that's how much Tesla is making. So I guess if you're crystal ball gazing, do you think that happens before the end of next year? I would say yes, right?
Um,
Feels like it's gonna happen.
End of 2027.
I
Yeah.
think sometime between middle to end of next year, that's enough time for it to happen. That's enough time for
Yeah.
SpaceX numbers to sort of stabilize.
Yes.
Let's say SpaceX is at a $50 billion run rate by the end of the year, maybe heading towards 70 to 100 billion for next year.
Yes.
Tesla's 100 billion, probably not as valuable on that revenue as SpaceX is, but let's say SpaceX might be 1.5 to 2 trillion, maybe even above 2 trillion.
Yes.
Tesla's probably hanging out somewhere between 1 to 1.5 trillion.
Okay.
Merge those two companies, I think you got a $3-4 trillion entity. maybe.
I think by the end of next year, I'm kind of in 60 to 60-40 camp. I think the likely, if you get to
Yeah.
100 billion ARR for SpaceX, Tesla feels much better about voting in favor of an acquisition. If SpaceX misses that number that Elon said, then I think it's different. But it seems like
Right.
the results that you want to see from SpaceX are what Elon laid out. If Tesla struggles, maybe has a couple of tough quarters in terms of hitting their sales volumes, maybe that tips the odds in their favor. But I think it's I'm 60-40, but I think we'll take until the end of 27 for the deal to happen,
Yeah.
Tesla to feel good about it, for the shareholder vote to happen. There's probably some regulatory antitrust scrutiny you have to anticipate as well. So I'd say
Oh, for sure.
give them
Yeah.
into 2027. That's what I'd say.
Yeah, well, I think the other reason you want it to happen is you probably want to do it during a Republican administration. You don't want to wait too long until a Democratic administration's in power, and that might happen in
Sure.
28.
Yes. Right. Right. So
Or end of 28 anyway.
and it's
But I would say I'm more likely a bull on all this stuff. I think if you look at the three lines of business, I'm very bullish on Starlink. I'm pretty bullish on the launch business. I think, that'll take effort to figure out, but I think they'll get there.
hmm
I think the AI business is the one that people were questioning.
hmm
And it feels like at least you've got revenue coming in the door from these big customers like Anthropic and Google. They've got the contract with DoD that's pretty big. Hopefully, the Cursor acquisition goes through
yeah.
and that's continued growth. So I don't know. I feel like Elon's actually pulling the pieces together, and you got to have like pretty good captains running each of those businesses to move them along. But
Yes.
still, I think if he gets the AI business to at least sort of feel like it's breaking even, making money, and you're pulling in, who knows, 30, 40, 50 billion dollars in revenue might be coming from just renting out compute.
Yeah. Well, you got 20 to 25 just in the bank already with Google Anthropic. Add one other. I'm hearing
Yeah.
it could be a 10 billion ARR run rate by the end of this year with an A++ management team. Like everything I'm hearing about that team has just been off the charts.
Yeah.
And they've been working with Elon already and they're keeping up. And so I think that may be a lot of hidden value. So that seems
I
like
think the other piece of this is Anthropic business is going through the roof, and sounds like they're doing 70, 80 billion dollars revenue, probably easily going to get to 100 billion by the end of the year.
right.
They need compute. And so I think SpaceX is sort of tied to AI, and SpaceX's AI business is sort of tied to Anthropic in a way. Kind of,
Yes.
politics makes for strange bedfellows. Earnings report makes for strange bedfellows. I don't know. I guess I'm kind of surprised, but I think I'm modestly optimistic about all this.
I think there's a lot to like on the earnings report, and you just have to get over the financing issues. But the fact they could raise 100 billion between their IPO and the subsequent debt offering means that they have lots of runway, and it's in Elon's nature to maximize those bets. So it didn't surprise me, but it obviously surprised a lot of people on the street.
I would say the only risk I worry about is if Elon gets hit by a truck. I mean, that guy better be hiring a personal trainer, running on the treadmill, like make sure you're in good shape, buddy. You can't die on this for the next 5, 10 years.
Let's ease off on that cannabis for at least the 10-year plan. Yeah.
Hey, that part I don't worry about too much, but maybe the other part, yeah, I would say ease up on the eating and drinking, get some of that dad bod off, and start working out.
Right.
On my 60th birthday, I will say definitely you should be working out, Elon.
Well, you're looking great. You look like you'd have another 60 years to go, I must say.
I don't know about that, but hopefully at least another 20 or 30. We'll see.
There you go.
Well, this is a great recap. Thanks, Aman, and we'll see you next week on the show.
See you next week, Dave. Goodbye.